All right, everyone. Wonderful to be here. Happy afternoon in Abu Dhabi, and great to have everybody here. Today, we're going to talk about the maturity of the industry. Tokens are getting more mature. We are all seeing the winners and the losers, and we want to really hone into the strategies of some of the best VCs and ecosystems here with our guests on stage, and get to the bottom of the new metrics to evaluate tokens and to really get investments the right way in a tokenized world with 2026 metrics and not 2025. So we'll start with the self-presentation, and I'm Tomer, the CEO and co-founder of Addressable. We do targeted marketing and data on-chain. We identify fraud, and we identify whales for marketing. And please do present yourselves.
Sure. Hello, everyone. Clement here. I'm the founding manager of Notalone Ventures, meaning that there are more founders. What we do in Notalone Ventures, we come from the ecosystem builders and operators background. We scaled multi-billion-dollar ecosystems in the past, and then seen what works, what doesn't for early-stage projects, and now building a new model of a venture that supports projects at the time when they need it most.
Super. Yeah, my name is, you can hear me?
Yes.
Yeah. Perfect, okay. My name is Abuagela. I'm part of Ceras Ventures. We're an early stage fund with a global mandate, sector agnostic within Web3 and blockchain. And for us, we always try to be very hands-on as investors, but also now focusing more on bridge building with institution, government and corporates as well, to not only support our portfolio, but overall to push the narrative of digital asset adoption. Yeah.
Hi, everyone. My name is Alice, and I'm the managing partner for Foresight Ventures. So Foresight is a crypto fund, early stage, and our fund size is around 400 million. And we do have office both in the US and in Singapore. The headquarters is Singapore, and our investment focus will be around all the crypto infrastructures, stablecoin infrastructures, as well as AI these days. And we just launched a new fund, which is stablecoin dedicated. The fund size is around 50 million, and we will be very excited to invest in anything that's related to crypto payments, including the on-off ramps, payment providers, and also the regulated exchanges, etc. So yeah, very happy to join this panel with you guys.
Hi everyone. My name is Alessia Baumgartner. I'm VP Ecosystems at DWF Labs. We are a Web3 market maker and investor, currently spread out all over the world. Since we've never fundraised from third parties, we have a quite flexible mandate. And recently we just launched our DeFi fund worth 75 million. So in case any DeFi founders here, I'm happy to connect after the panel. So thank you for having me.
Thank you, everyone. Thank you for the introductions. We'll start with the first question. Each and every one of your ecosystems have a lot of token projects, a lot of portfolio right now, very big ones. And when evaluating next year's strategy, what metrics do you use in your portfolio, existing portfolio, to really evaluate where to put more and where to extract, where to push more and where to withdraw? And the metrics or the real KPIs are what matter. What do you measure for existing projects to know, are they going to make it and grow big in next year?
Okay. The way we see it, and that's the reason why I open up with, we support founders at the times when they need it most, is that it doesn't matter how long you're building your project, 6 months or 6 years, month before TG, month after is make it or break it, right? And then there are so many blind spots that all of us develop eventually. So for us at Notalone Ventures, when we talk about the metrics, we look at the pace of team movement forward from the idea, how often and how quickly they pivot. That's an obvious one. But also, what are the gaps and where is the edge for us, how can we fix it, and what would be the horizon for us to fix it for the greater good of the project. So not gonna be a rocket science about what are the metrics, but basically all the partners that they secure, the team composition, the sense and relevancy to the current trends, understanding of them, and how fast can they capture that attention, because with the momentum, the conversion of that attention can either help you build a treasury and extend the development cycle for your product, or shorten it.
I think, yeah, from our side, when it comes to metrics, one part would be on-chain analytics on financial statements, for instance, fee generations. Also, if it comes, we also invested in consumer-facing application. So there we're also tracking how's the user retention, also the revenue growth over the years.
How do you measure user retention?
I mean, one thing, as you may know, let's say if it comes to, we had our learning curve also with gaming projects, also Sociify, and there you see easily, okay, how long can they sustain? I mean, we had to learn it also in the hard way with some investments, but the good thing is now we have a lot of dashboards as well that we're using, also AI-generated dashboards, and that helps a lot our internal process to get more transparency.
Yeah, to add up to that, I think user retention and user metrics are very important metrics that we look at. And I can clearly see, like, you know, in the early stage of growth, these metrics are important, but later you have to find a business model that can actually monetize these user growth and kind of make it a sustainable cash flow stream for your company to sustain. So I think another important one is definitely how much do you have right now in your treasury, if that's enough for you to, you know, achieve a minimum, like meaningful scale that can help you to generate revenue on your own. So I think a lot of the startups cannot go through that phase where they spend a lot of money in user retention, acquisition, but they never achieve the how do I say, make ends meet, right? They can't go past that stage. So I think achieving a certain level of scalability and make ends meet would be really important for us right now.
And when you think of the best monetizing project, or the project that monetizes users the best in your portfolio, what do they do? Like, what's a secret for monetizing you can share with us?
I think for monetization, I see a lot of the companies being quite successful because they're building a platform instead of like building a niche product for a very small group of people. So you can kind of bring down all the costs for regulatory, for infrastructure, tech, and also for your marketing fees. Everything could, you know, achieve a network effect more easily if you build a product that's like all-in-one platform for everyone. So I think lower your barrier to build a product is very important right now.
Sorry. So, I mean, from our side, we have two ways to invest. Either the token is already live or it is a pre-TG project. So when we're looking into a already live token, I think what everyone will look into are the exchanges that the project is listed on, if those are exchanges that have real organic volumes. Other than that, of course, the volumes themselves on those exchanges, because I don't know if you guys have seen, but you know there have been a lot of delistings happening. It does not matter how old the token is. Exchanges have been just delisting projects for several reasons. So, of course, we look into these aspects, liquidity. We can also go through the on-chain analytics, but I think once the token is live, you just care about the token, and that's pretty much it. And then on the pre-TG side of things, look, depends a lot on your strategy as a fund. If you are just targeting projects and putting small checks into them, your strategy will be spray and pray. It is what it is. And we all know that 9 out of 10 VC investments will not go live. But now what we've been doing a lot at DWF, and that's the idea behind the DeFi fund, is to work more closely with projects, sort of like incubate them. I know a lot of VCs have done this, but from our side, besides giving the initial check, we would work closely with the projects by providing liquidity, integrating their platform, helping them with additional funding. So that's a way for us to avoid the spray and pray. But of course, you need to have treasury, and not everyone has it, and expertise in the market that you want to invest further. In our case, DeFi for sure, because we are market makers after all. So yeah.
Thank you. Actually, it leads me to my next question. So I'd love to start with you, Alessia. When incubating those new projects and of course funding new projects where not a lot of data exists, what are the main North Stars you're putting to founders, or the main things you tell them to maximize in order to have a successful launch? Or in other words, what are the key questions you want to be answered for an investment from your side when the project is new? There's no data, there's no real traction yet, but you want them to persuade you over some time, let's say 3 months, that they're worth investing in. What will satisfy your need to and your conviction, except for good people?
Yeah. Besides working with teams that you can trust, which not always, there are certain aspects we look into. So, for example, how innovative is your project? If you're building a predictions market now, you're kind of late because Polymarket, Kalshi, all these guys launched like 5 years ago, or started building 5 years ago. And then now for you to sort of get traction and compete with these guys, complicated, especially with them fundraising billions. But yeah, I think from our side is how innovative the team is. If they are looking ahead, again, you should build something looking into launch in a couple of years. And then another point that we look into is just the execution of the team itself. I mean, I've spoken to so many founders that want to build a perp DEX or whatever, and they've never worked for perp DEX, never worked in a trading desk, nothing, and they want to build it on their own just because it's trending. So I guess the most important aspect of any team is just the execution part. But of course, if you're not necessarily that advanced on that side, you should work with people that could help you with that. And that's what we do. Also with Addressable, these are some ways for them to grow their user. Yeah.
Yeah. So for us, I think our investment thesis is quite straightforward. If you look at any projects, the first thing I will ask is which market you're targeting at, right? How large is that market, total addressable market? If it's large enough, if it's still gonna survive in the next 5 years. If unfortunately you're in some sectors like GameFi and NFT, then how fast you can pivot to the ones that it's deemed to be more sustainable. For us, it's payments, stablecoin, AI. I think these are the sectors that's gonna last for at least 10 years. So that's one. And then second one is the question I will ask for founders: who is your first customer? How do you define this customer? And if it's a retail customer or institution customer, and what's your product market fit, right? How do you serve these customer pain points? And why they have to choose your product over others? Either you have strong technical background, or you do have a strong relationship in this industry, or you just you have a know-how, local know-how, or you have the regulatory required in the niche market. These are all the reasons that that's going to help you to compete with other competitors. And in the long term, you would also, I will also ask a founder, like, what if, say, other big players come into this space? What would be your competitive edge? Or even if that edge is like a soft edge, how long do you think that edge could help you, to be ahead of market, maybe for 1 year or three years? And how do you gonna use that time advantage to build up your user base, right? I think these are all good questions, and I think we always see this market in a dynamic way. And I think the moat is there, but every moat is kind of soft moat. So execution is definitely very important at the end. Yeah.
I also strongly agree with Alessia and Alice what you mentioned, especially when it comes to having a technical leverage. I think solving on the one hand a real pain point and also being able to create a strong user retention without misaligned incentives. What I mean by that, for example, you maybe know the case this year with USDX. They created 300 million debt, right? The code was perfect, tech was fine, but there was no substantial leverage. And I think being in a position to have aligned incentives and a clear pain point is really the key. And also focusing now from VC perspective also on the real impact, right? At least what you mentioned with the stablecoin narrative, or even if it comes to tokenization, focusing also on areas where it's not only consumer driven but also institutional driven. I think diversifying on that front is also very essential.
Yeah, for me, I would agree what Alessia, Alice, and Sarah just said. But to be relevant, could you remind what the question was?
Yes, in new projects, what is your investment advice or guideline for the founders to be investable by you?
Yeah. So for us, we like to believe that there are plenty. We've seen the trends, right? For example, Mo from Aptus, right? He started Maximum Frequency with the core thesis that there's plenty of VCs that are capital allocators. There are only few that are actually helping projects grow, right? And while all of us know that VCs, one of the superpowers, capital, another one is open doors, right? For us, it's important to understand what are the edges that we can bring to the table, to the founders early, and swap parts to increase the pie that they can grow. So for us, the investment thesis is not focused on narratives. Narratives are great to convert the attention better, but we generally focus on nuts and bolts. At the end of the day, we are all in la la land of Web3 and valuations are crazy, but everyone is building a business, right? Not only Ponzonomics. So we focus on nuts and bolts, on fundamentals of the business, and help them maximize the attention that they can capture.
Thank you. So Alice, you mentioned the risk of the market moving, and you want founders to really be able to adapt when markets are shutting down and other markets are emerging. I'd love to ask about risk management and start from you, Alice. What are the biggest mistakes you see that founders are doing in early stage when not adopting to liquidity changes, market changes, and different types of risks any startup is facing? One way to phrase it, what are the biggest mistakes? And the other way is, what are things that founders should do to maintain this adaptability, to be able to move fast or change according to the market shifts?
Right. I think most founders that I talk to, they're super smart, super heads down, and they do know what they're doing. Most commonly, I see is that they are faced with too many options, right? They wanted to do a stablecoin plus AI platform, or they want to build something RWA plus stablecoin. So, I mean, either of these sectors would be very interesting, and you wanted to catch the hype for both sides. But you're a small team, and you don't have that many people. You don't have that many resources. At the same time, it's very important to manage a team that is from small to, achieve small success step by step, and then your team will be more, convinced to execute the plans and the goals that you make for them. So I think when you want to build something, you have to think through. You have to find one needle point to start with, and then try to optimize and try to find something that you're you're best at, and your team is also very very good at this, and then you expand from there instead of trying to do everything at the same time.
Yeah, Sarah, what mistakes founders are doing? What do you see that are the biggest mistakes?
One thing I would like to talk about is, for instance, tokenomics, the use of tokenomics design, because even we saw with our portfolio or when we were doing due diligence, it's always about focusing on, okay, what you're trying to solve with the protocol, the technology you use, and sometimes you don't need directly a token. I mean, even for us, we do token and equity investing, but sometimes, I give you an example, for gaming, for instance, right? We had the downfalls of some projects like Axie Infinity. They launched tokens, but the tokenomics design wasn't really needed. And that's why, especially when it comes to consumer-facing application, if you want to raise money, even if you get to VCs who said, okay, we prefer token, think twice, do you really need a token? Then rather go with equity and then token warrant. So especially around tokenomics, needing a token, it's better to think twice than just doing it for the sake of doing it. Yeah.
I think from my side, a risk that was not that relevant in the past, but could be more in the future, would be regulatory risk. Back in the day, or at least till this year, regulation was not in place. We saw big firms emerge. For example, Tether. It was a stablecoin launched many years ago. There was no clear framework, so they grew, became the biggest stablecoin out there, and now they can go to the big tables and discuss. But of course, regulation are becoming slowly more structured, and I do see that could be a potential risk for the future, especially if we're talking about certain DeFi products, that if you don't have proper advisory, it could affect your project in the future. Besides that, of course, need to make sure that you have enough treasury in case of anything happens. We do have a crypto forward policies now in the US, but we don't know if it will continue after a couple of years. Of course, there are more, there are better jurisdictions to work from, like ADGM, VADA. But yeah, I think this is one of the risks that I see in the near future that some founders should look into, because usually jurisdiction, legal stuff, founders try to push as far as possible until TG, and then they have to spend a lot of money in order to get some legal opinions or set up their companies properly before TG. So yeah, I would say that.
Yeah, from my side, I see risk twofold. One, for the bigger protocols and established ecosystems, the risk for them is growing out the relevancy. Like, great example, whatever the protocol that raised in 2017, 18, 19, right? They reached certain valuation right now. And they sold the community on one vision, and now they're moving on. Right, so, and they have strong opinions and strong ego attached to it. That, what do you know, right? Like, if you give feedback, what do you know? Like, I built something that is worth billions of money. I would just stick to that. So that is the risk of the bubble and echo chambers that unfortunately a lot of founders from that era follow. And on the other hand, the pre-TG projects and early startups, right? They face the risk of working with the wrong people, right? Simple as that. Great example, you're the founder, you got a skill, you got an idea, you can execute, you need resources, right? You can run to an ecosystem to get a grant, you'll get a grant, and that's about it. But then you're expected to deliver miracles. That never happens. You go to VCs, VCs can give you capital, but they also expect returns on a pretty tight horizon, right? And from what we've seen, not all of the founders are great at dealing with that pressure of all of a sudden you have a lot of money and then you need to deploy it somewhere, right? And then who to work with. And the internal joke that we have is all about who not to work with in this space. And that sets you up for this lonely chapter where there's a lot of pressure, a lot of responsibility to your investors, to your community that you sold the vision to, but then who do I talk to, right? And what we've seen happening way too many times is that people are in rush to make the call on market maker, on KOL, on whoever that is, without vetting them or vetting them in their little echo chamber and not getting confirmation enough to know that their incentives are aligned and they're not going to be screwed over later down the line. So people.
People's mistakes are with selecting people. So I think one trend we're seeing is as a lot of the narratives in crypto are merging with narratives in high tech and other types of startups around AI, around L2s merging with fintech and so on. And I'd love to ask about some future-looking thesis, like we don't want to invest in prediction markets today because it's a matter of maturity. There are so many mature companies now in this field. What are the trends that you're seeing that are emerging in 2026 that can become big industries and that are worth investing right now in the upcoming year because they will become very big businesses in the future? So what are the investment theses and trends that you see that are worth noticing now? And we'll start with you, Alessia.
Me?
Yeah.
We have similar name. Okay, so I think this year we can highlight some verticals that emerged: prediction markets, perp dexes, and stablecoins. Real-world asset tokenization, this has been talked for many, many years, but anyway, all of them bring one thing, I have at least one thing in common, which would be on-chain finance. So for us in the future, we are looking to work more closely with DeFi projects, building on-chain products, and especially on the yield-bearing side of things, not necessarily launch a new stablecoin, but some products related to yield-bearing assets, or also something interesting that I saw for many years, but I think now would be, how can I say, would be easier to build, would be dark pools. So yeah, those are some of the things that I've seen. But yeah, I mean, of course, we also saw AI, crypto convergence, or now robotics as well. But those are some things that we haven't necessarily looked that deep into.
Yeah, I like to just share a few insights that I find these days in those emerging markets, because we all understand that there is like a large population of underbanked users there, and then they want US dollar access, right? And then what we find recently is like this kind of adoption rate is accelerating. If you talk to, we've been talking with a lot of card issuers in Latin America, and we find out that the average user spending per year on the Latin American region is as high as $8,000 per year. So you know, stablecoin adoption is actually happening much, much faster than we expected. And also, if you look at the on-chain FX, there are so many VCs investing in the on-chain FX right now. Either it's like a FX venue or the non-US dollar backed stablecoins. I think they are all seeing great tractions. But right now, it's just, the volumes are high. We're still trying to figure out how do we best monetize this because the margins are still low. Considering we're in the early stage of adoption, we need to subsidize users to attract them to use our product, right? But I mean, so in general, I think stablecoin adoption is definitely something that worth looking at in at least 5 years time frame. Yeah.
Also, I agree on the stablecoin. As you mentioned, also Alice has such a strong use case, especially Africa, LATAM. Besides that, I'm also big on real world, also RWAs, especially for financial products. It's interesting to see if we look back 10 years to now, adoption of digital assets was driven by consumers, retailers, and since 2 years, we see really that jump with tokenization. If I just checked recently, the latest statistic, late 2024, we had the RWA market without stable coins was $5.5 billion US, and now in Q4 it reached already $18.8 billion US. So
you know why? They tokenize everything.
exactly,
Like a laundromat is tokenized. So many crazy things. Like the most brick and mortar businesses are tokenized.
And that's why, especially bringing the institutions now into our space, I think it's the core. And with tokenizing financial products is the first part, and later on, of course, real estate, consumer-facing sectors will come.
They tokenize molecules. They tokenize so many things. The more assets you have, the more you want to borrow on top of that and tokenize that. And people tokenize every asset they have. Even land on the moon is being tokenized. Although it's bogus, it's tokenized now.
The space is the limit. So yeah, it's so very big on RWAs.
Yeah, I was about to say the same, but it's going to be all of us talking about RWA. That's probably not fun. But another angle on RWA is tokenizing the financial products, such as debt, right? Student debt tokenization, other kinds of debt. That could be interesting. Second one is the obvious trend of what's going on in US, and that a lot of people are trying to catch up, right? So what are the banks, what are the institutions, like bringing their ops on-chain and transacting 24/7, and for them making more revenue is valuable, right? So that could be, but that's a bigger play, right? The third one that I see is I'm still very bullish about AI and blockchain. Right, we had that hype last year about the same time with the base agents and so on, but that was the first wave, in my opinion, because this is the really first cycle when we have a capable AI, capable of doing something. So what traders been doing and analysts been doing manually now can be done in a blink. So I'm very excited about me personally about that category and see more products, meaningful products coming out of that.
So, taking this AI subject, and I know there's AI everywhere, and AI in every panel, and AI in every conference. So we see AI and crypto not picking up. The reason is, of course, it wasn't useful in the first cycle, or not a sustainable use case that people really need and really want. When looking at all the use cases of AI and crypto, we saw those first cycles, of course, but if you look into the future, is there a real need and a real thing that in this intersection between AI and crypto that you invest in, that you have really invested in the past few months or planning to invest in the next few months?
Yeah. So we had a few. So one was decentralized infra where they help to optimize the GPU and reduce the cost, right? So basically they've done the math, not gonna name drop the project, but they did the math that for someone to spin off their own AI startup, they need to go through 5 institutions, get permits, open the company, spend $20,000. With their infra, you can spin off your AI company in 5 minutes and reduce the cost by 80%. That's meaningful, right? Had a lot of chats with people from SF about decentralized AI. They're like, stop it, please. If it doesn't have to be decentralized, if it's not adding edge to the operation and we are just decentralizing for the sake of decentralizing, then it's probably a waste, right? So that's the first one. The second one that we have right now on our radar is still crypto, pretty much place for speculation and the gains, right? So the obvious use case is the interface that can feed you the infra that you can train, that can either send you the right signals or even auto-trade on your behalf. And that becomes your personal assistant, personal trader, personal alpha channel. And aggregation of data happens so fast, it's just a no-brainer that there should be use cases around it that even abstract the blockchain or anything. Like people don't really have to know which chain it runs on as far as it solves the problem.
even I think, adding to your point, having really blockchain as an element that gives a clear advantage as execution and privacy layer as a core. And I think on some narratives we have mentioned for prediction markets, for instance, even if it comes to VC operations, we're exploring right now how we can use also agentic AI for portfolio management, due diligence processes. So anything that can, as you mentioned, make your operations more practical, privacy preserved. I think that will give the direct value add. Yeah.
Our investors, they have a trick. They take the board deck from last time, and they take the board deck from this time, and they ask the AI, have they delivered what they promised or not? And for everything they haven't delivered since last quarter, what should I ask them? And then they get a list of questions for the board meeting asking us, oh, what about that? Oh, you said it will be ready in March.
It's all about the inputs. It's all about the inputs.
Yeah, so I totally agree with what you guys just said. And just to add on to that, we believe that there's opportunity not just in AI infrastructure, but also in AI applications and AI trading bots. Right now, I know a lot of the criticism will be like, maybe people are not willing to give AI a wallet to control your assets and then do trading. But I guess innovation is happening much faster than we expected if we look at it in 10 years time frame. So we've been seeing some really good AI LLMs dedicated to crypto right now coming up for even like on-chain researching or on-chain trading. I believe that in even just 3 years, we'll see some really good models coming out. So we'll be very excited to see the future from now on.
And will you, in trading, we see a lot of trading bots. Are you feeling comfortable to deposit your money with a trading bot?
I think for right now, people use AI LLMs like agents to make analysis. And trading is the next step of that, right? If I think this analysis it makes sense and it actually, the historical data shows that it makes money, then I will be willing to deposit some of it.
Yeah.
Like even just like $1 or $2 into this wallet to try it out. But I think the future is there, and then the technology is actually evolving much faster than we expected. I remember last time when I was using AI to make a photo, right? It was so bad. But right now, if I ask my PR team to generate some pictures with AI, it's even better than our designers. So I think we're underestimating the speed of innovation happening right now.
I mean, I think everything was discussed here already. But yeah, from our side, I think machine learning into trading, as we were talking before, it's quite interesting. We use in our strategies. But again, our quants all have PhDs. It's not just a kid in a basement doing some building a AI bot itself. So yeah, on the trading side, let's see how it develops. Of course, the biggest trading firms all use already. But yeah, they don't trust 100%. That we all have to put our own inputs before. And yeah, there's a whole OPSEC part of it as well. But yeah.
So we're in our last 5 minutes. I'd love to ask some summary question. And it's and we have founders in the audience, and I'd love to ask, what is your recommendation for founders getting into the space of crypto in 2026? Where should they start? What should they look out from? What's your biggest advice for a new founder getting into the space?
I mean, this is so broad, right? I think at least we have 4 people here in the panel that each one can give some sort of direction. Look, getting into crypto, I guess I would have a lot of persistence and resilience, because the market is not easy. Everyone keeps talking that the next year, there's a bull market. let's see. But yeah, I think just being resilient and, of course, as mentioned before by Alice, Sarah, knowing when to pivot if needed, because there's no point of building something if you know that it's going to hit a dead end. We do have portfolio companies that, midway said to us, hey, the initial project you guys invested into, we don't have a belief in it anymore. But we do think that this could be the next product. So yeah, I would say be resilient, but also understand when you should pivot, because it's a fast market. It's completely understandable. And your investors are most likely investing into you because of your team and not necessarily into your product.
Right. So my advice would be instead of trying to think about an idea, try to talk to as many people, as many clients as possible to find out what the real problem is. And then along the way, you'll find the right people to work with, or even find your right business partner. So always start with the first principle of what is needed by the market right now, instead of like what's hot, what's the most attractive narrative. This narrative could change, but the pain points never changes. Yeah, thanks.
I would also to add on that, not only finding the why you need blockchain or crypto, why you need to implement it, but also building up if the founder is not yet in crypto, really engage and build your kind of own ecosystem. Talk to investors, builders, regulators, even conferences, like, as you said, like doing the research, right? If it's really the right fit, and then make the decision as well where to start within crypto, because at the end, crypto this is so broad, right? You can tap in so many different sectors, but finding really your sweet spot, your focus is also very important.
Yeah, I finally came up with a few. So first one, if you already have treasury, please don't borrow against your treasury. There are too many founders that lost their funds and that got liquidated. That's not fun. Second advice: if you don't have a treasury yet, probably try to mute all the notifications from CoinGecko and CoinMarketCap about price movement. Really distracting. Zoom out and bet on a macro, and where would you be relevant on that macro, right? I couldn't agree on more on getting the user feedback and feedback from stakeholders in the space. But the third one would be get the aligned partners that are with you for the long game and focus on macro. Ship in increments, better done than perfect. It's better ship something, get the feedback, move on, pivot, just regular entrepreneurial thing. As opposed to shipping your product that is pixel perfect, but in the middle of the bear market.
I'll add my 2 cents here, which is solve a problem that lasts. The problem must last for many years. I think crypto is tempting for getting quick money. So you're solving something small, you're getting a solution out very fast, you're getting that hype around that, and you get funded. And then you find yourself with a lot of money, but with a very small problem, with a very, very small growth potential. And what it means is that crypto is becoming more mainstream. You need to solve a problem that lasts for people that pay and are willing to pay for that, not only next year, but in 5 years from now. So the problem must be a very, very long-term problem. And the solution must be robust enough to hold that. And I think that crypto projects, and we work with more than 100 crypto projects, shipping, marketing, user acquisition, user retention. We see that only those who are aiming higher now, in these days, only those who are aiming higher for larger problems, larger solutions, are getting enough traction over time and stable enough for the long term. And it means that there's some consolidation between startups in the crypto space and startups in general. It's becoming the same thing. You cannot just ride the hype, get fast money anymore, except for a few exceptions. But most of the projects need to really do what other startups do, to solve the biggest problems in the world for the longest time with a big solution that will have enough moat to stay alive for many, many years. And I think that this is my key advice for founders today, is to aim higher, take more risks, build a bigger team, raise more money, and then be able to stay and sustain as a business for much longer time. Thank you very much.
Thank you.
Thank you.